So here are 3 reasons why you may be losing money trading in 2023. We're going to go over it in simple format because I think it's important. The first one is risk. Easy, right? Protect your downside first. Too many people, in my opinion, are focusing on the most obvious thing in the world. How much money am I going to make waiting for their account to just do this, grow? Most people think, well, if I do a trade going long or whatever, and it just does this, I'm going to make loads of money, winner, winner. Whether you're investing, whether you're trading, but how much money are you leaving on the table? How much money have you risked to allow that to happen, right? So it's not so much about the risk to reward. That doesn't matter because you could have a runner, right? A trade can run. But what people forget, and this is the most obvious thing, and we talked about this last night on the Learning Crypto live stream, this bit is what you want to worry about. How much money are you putting on a trade? But it's not that, that doesn't bother me. It's when are you wrong? How much are you losing? So let's talk about that. When you are doing a trade, you need to work on one thing and one thing only. Consistency between how much you are going to lose per trade. It should be no more than 2%. Unless you're like me and you trade maybe one asset every now and again, you can maybe do it a little bit higher, but not too much. But if you're trading, whether you're day trading, swing trading, whatever it may be, no more than 2%. If you've got 3 or 4 trades on, probably lower that as well, because that could get very messy if you are wrong on every single one, because you could be. Very, very easily statistically proven you could be wrong 3 or 4 times in a row and you could literally lose 10, maybe more % of your account. So what is your risk? Your risk is simple. The point of which you are wrong. So let's just say if you're going to do a normal sort of setup here and you're looking, actually we'll go to the lower time frame so we can kind of do something at least of some sort of interest here. So let's look at, going long, random example, I know, long here on AVAX, right? And let's just say you are looking for a potential retest of this level as a random example, right? This level, obviously ignore that because we're currently here right now. If this is the range low and this is a range high, cool. But what you need to do is protect your downside. Now, what you need to be aware of is you should only be risking 2% to make 4, right? In terms of risk to reward. So whatever your amount is, it will multiply by 4, obviously, right? So you're risking, say, $10 and you're looking to make $50 overall, right? If that kind of makes sense. It should make sense because that's what the risk factor is. But it's all variables, right? The main thing you need to worry about, and as I say, ignore this bit, doesn't matter because a trade can run wherever it goes. It's all about protecting your downside. Sometimes you'll make more than others. Sometimes you'll make less than others. Sometimes things will trade and they'll just keep running and running and running. And you're like, oh, it keeps going. But you need to get your exits right. Yeah, that's another factor we've got to consider too. But when you are doing a trade or same with investing, I do the same thing. How much do I want to lose on this trade? And that is the overall factor and the stop that you need to have. And again, a little bit of a tip here. Don't move your stop loss. Don't add to your bags if it keeps on losing. All that kind of stuff should be quite normal. But what we find over on Learning Crypto is too many people are not even looking at this and they're just thinking, right, I'll just put that on, that's fine. No more than 2%. No more than 2% of your account every single time. Because even if you are right more than you're wrong, you will make money. But that one time where you don't follow that rule because you're getting cocky and overconfident, you could lose a lot. And it does happen. I've seen it quite a lot. The next point, and the most obvious point that we do need to talk about, is increasing your positional sizes. You've won a couple in a row. You're overconfident. You're giving it the beans. And then all of a sudden, yeah, you've still got that 2% account. Cool. But you've won big in one trade. One of them's ran. And all of a sudden you're putting bigger stakes on, even though you're keeping that 2% rule technically, but you're putting bigger stakes on. Sometimes you don't need to put the bigger stakes on, just leave it, take the profit, leave it in the account, let the account consolidate a little bit. Just stick with the same amount that you are playing with. you'll still make some money somewhere. And then when it's right to do so, or when you hit a certain milestone, maybe you can start looking at potentially increasing the amount. What we see a lot of, and Gaz has just done this on the Earn While You Learn, is he's now said in his monthly review, and he does this every quarter essentially, in terms of he likes to move his money around, increases the position size. But like I say, you may well, right, this is where it comes from. Say if you win 3 or 4 in a row, and then all of a sudden you go, right, I want to increase my positional sizes. All of a sudden, you may lose 2 or 3 in a row. Those increased positions are just going to make you lose pretty much most of those profits if you've not thought about it properly. That's the main reason. Overconfidence is one of the biggest things, in my opinion, because you think you're untouchable. If you get a euphoric, you should probably stop. If you're getting too fearful, you should probably stop. Walk away, close the laptop, come back tomorrow, right? The next one and the last one on this video, no setup plan, especially before execution. So we've got on the screen there, as you can see there, very, very simple kind of range area, right? It's a lot of bollocks, right? Just random for an example video. But you need to combine what I've just said before. What is your risk amount? What is the point of when you are going to be wrong? Try and prove that you could be wrong on this trade. And then try and find where your exit point could be. Now, whether you are going to use a very simple metric in terms of, well, what if I use something like just a Fibonacci? What if I'm looking at these higher swings to this low? Am I going to look at certain key points here? Maybe. What about if I'm looking at weekly levels? Maybe. What if I'm just looking at whatever indicators are giving me certain chilly vibes? Yeah. There's a lot of areas on here where you can look at areas of resistance, support, whatever, and there may be points where you can get out. You need to plan what you're going to do. If you are following like a moving average, fair enough, but it's not the best strategy. The reality is you've got to look at where the price could go and take something out of the market. Your goal is to take money out of the market, whether that is at support levels, whether that is at resistance levels, whether that is because something's happened, whether that is because it's ran too far, whatever it may be. But you need to plan for it, right? If you are looking at certain metrics on data on the chart, and you're looking at, say, for example, this low here could be a great place to go long, and let's just say the end goal is getting up here eventually, but you got to look in between. There's a level here, there's a level here, right? You have to plan for this and plan accordingly. Write it down, journal it, make a note of it, put little areas on, put alerts on your chart to find out whether you're going to hit those levels if you're in. Because what tends to happen is you go, oh, low to high, I'm going to ride it all the way. You're thinking of the money, you're not thinking of the downside, you're not thinking of the reversals or the wicks to the downside that may well catch you out. You need to take profit incrementally as things go. And how do you do that? By executing a plan before you start the trade. Simple.